Friday, January 10th, 2020, Maneco 64, home of alternative economics and contrarian views. This morning, I want to talk about how the central bank gold rush continued in 2019. I want to talk about the GlintPay App, which provides you a MasterCard that allows you to store gold and spend gold as a currency. I want to talk about the economic data today, of course, the U.S. jobs data, how it might affect the market. Before that, of course, I'll look at the markets, where they are. It's just gone past 8 a.m. London. So yesterday, again, the stock market rallied, made an all-time high. The Dow Jones Industrial Average confirmed the S&P and the NASDAQ. Dow was up over 200 points, closed just under 29,000. So it continues. It's a bubble. There's a lot of greed out there. There's a fear of missing out. And it looks like these markets are going to continue to go up until they don't. As long as I think the central banks keep accommodating the system with easy money, printing money, very low rates, it's going to continue. So as I speak right now, we've got spot gold at $1550.75. It's down just over $1.50. The range has been $1545 to $1554. Silver, $17.94, up 5 cents. Range has been $17.83, $17.97. I think the key levels here right now, 1553, 55 in gold. If we're able to get back above those levels, we could see another move higher. As I've said many times in the past, markets never go up or down in a straight line. We had a very strong rally in gold recently when we broke out of that falling wedge from around 1480 to 1611. So it's natural that gold has corrected. Granted, there probably has been some manipulation, but markets also need to correct, to pause before they go higher. So that's what I would say. For silver, of course, the 18 level is the resistance here. The stock market continues higher. The Dow future now is just above 29,000, 29,020, up about 60. S&P 500 index future, or SPX future, is at 3281, up 7. So up about 0.2%. NASDAQ 100 future is up 1/3. What about the currencies? Cable or sterling right now, 130.63. We saw sterling drop a little bit yesterday. We had weak retail sales data out of the UK. It's now at 130.63, unchanged overnight though. Euro 111.06, unchanged as well. The dollar is unchanged against the yen, 109.57. The dollar is unchanged against the Chinese yuan, 692.73. Crude oil, WTI, 59.30, down 0.2%. Brent, $65. Quick look at the bond market. 10-year yield, 185.60. So very volatile still. Seems to have calmed down right now. The markets, with the geopolitical situation calming down. We did go down to 170, of course, a few days ago when the markets were down like 450 points, the Dow, overnight, on the back of the Iranian bombing of U.S. bases. So the big statistic that comes every first Friday of the month, and this month, of course, it's the second Friday, but as it was very close to New Year's Day, New Year's Eve holidays, they've published it on the second Friday. It's non-farm payroll, the job data. I don't think it will. I said I was going to talk about how it's going to affect the market. Well, I don't think the market cares. The stock market is going to keep going up no matter what the number is. In the past, when I worked in the markets, if the number was a strong number, the stock market would actually correct. Bonds would drop, yields would go up because people would think that the Fed would be a little more tight, and vice versa. If they were weak, the numbers, the markets would rally, bonds would rally, yields would go down. But nowadays, it doesn't matter. Stocks always rally. Bonds pretty much go up as well. It doesn't matter what the number is. So be as it may, non-farm payroll is expected to rise 164,000. Don't forget, this is a survey. It's not a real, they don't really go out there and count how many jobs are created. They do a survey and they extrapolate. Versus 266,000 the previous month. The other number that the markets look at for inflationary pressures is the average hourly earnings. I would look at that as well. Keep an eye on that. That's expected at 0.3% month on month versus 0.2. If that number is very high, it could hurt the markets actually, maybe, but we'll have to see. And why? Because it could mean that the Fed might not be as loose because they might be concerned about inflationary pressures. So the gold rush in 2019 continued. And let me be clear, these are not the central banks I usually talk about that are buying gold, like the Fed or the ECB or the Bank of England or the Bank of Japan. No, these are probably central banks in countries that have more sanity than our central banks in the West. They're actually accumulating gold. They can see what's coming and they're continuing to do it. So very interesting article yesterday from the World Gold Council's website called gold.org. I'll put a link to this article below so you can have a read. I'm going to go through it right now. So it says, and it's from the Gold Hub blog, central bank demand remains on course for remarkable 2019. The author is Krishan Gopal, Market Intelligence Group, World Gold Council. And this was posted yesterday, 9th of January, 2020. So let's go through the article. Happy New Year to you all, it says. While the entire world is looking forward, for the most part, to what is in store for 2020, we are still busy working on assessing how gold demand ended in 2019. Part of this involves updating our central bank gold reserves data set to the end of November, which we have published today. So he goes on to say, in November, central banks reported adding 27.9 tons on a net basis to global official gold reserves, 43% lower than October's increase. On a year-to-date basis, this brings cumulative net purchases to 570.2 tons, 11% higher than the same period in 2018, which was 515.2 tons. So even though November was lower than the previous month, on an annual basis, year-to-year basis, the pace of gold buying has actually increased. 2018 was a remarkable year as well. It was the biggest increase in central bank reserves in 50 years, and it looks like 2019 will be the same. We need to wait, of course, for the December numbers, which will probably come out in early February, I would say. So here's the chart of the activity of gold reserves. The shaded bar, that's gold purchases. The darker bar is gross sales, and the red line is the net purchases. You can see that it's been net purchases all throughout 2019. Let me just have a sip of my NDECB mug, my morning coffee. There you go, NDECB, Ferme la BCE, which is in French. Die EZB herunterfahren, which is in German. It's in my Teespring store if you're interested. Maneco 64. All right, so let's finish off this short article. Purchasers were relatively scarce in November, with only 4 central banks increasing their gold reserves by a ton or more. Turkey, 17 tons, Russia, 9.4 tons, Kazakhstan, 4.6 tons. I wonder if Borat is involved. And Mongolia, 2 tons, were the familiar faces in the purchases column. On the net sales side, only Colombia saw reserves decline significantly, 5.1 tons. While November was the second lowest level of buying so far in 2019, July was the lowest. The scale of purchases year to date remains remarkable. Following the 50-year high in 2018, few, and I put this is in brackets, including us, the World Gold Council, expected the buying strength we have seen. Look out for a full year 2019 gold demand trends report in a few weeks, which will provide a complete assessment of central gold demand in 2019. So I would say thank you, Krishan Gopal, for the analysis. Very good short article. So yes, central banks manipulate the gold price, but you have to understand that the central banks that do that, mostly the Fed and the Bank of England, a lot of other central banks around the world, they know what's coming from this credit bubble, from this massive increase in the money supply. I think it's been about 14 trillion or more since the crisis of '08. They know that what the consequences will be for fiat currencies in general. So they are protecting themselves. They're protecting their national currencies by having a good amount of gold in their reserves. And that's why, as I've said many times, you need to do that as well. You see, central banks, they still consider, and rightfully so, gold as money. So to finish off, I'm going to talk a little bit about Glint. I actually had a long chat with the Glint CEO yesterday. I had a Glint referral code, which I deactivated in September when they went into administration for 2 months. And I've waited since they left administration in November to reactivate that referral code. And as of today, I'm reactivating it. I had a long chat, as I said, with Jason Cousins. I'm comfortable with what he told me about what happened. And we're planning to do a video interview where he can explain to the public in his own words what happened. The administration, of course, affected only UK and EU clients. The US business kept running, so there's no problem there. And what does GlintPay do? For those of you who might not know about GlintPay, well, it allows you to buy physical gold bullion, which is stored in your name in an allocated account, and it's stored in a vault, private vault in Switzerland. And at the same time, the app allows you to buy the gold, of course, to keep fiat currency as well if you wish. I think right now it's just sterling, euro, and dollar. And then they provide you a MasterCard. right here. This is mine. I've had one for about, well, over a year, maybe a year and a half. And so what you do with the app is, let's say you have 10 grams of gold. You can activate the gold account onto the card. So it allows you to keep your funds outside the banking system because it's in gold, out of the banking system. But at the same time, it allows you to spend it as a currency. How it works, it's in real time, very quickly. When you spend the gold, you go to a shop that accepts MasterCard anywhere in the world, and you pay for something with the gold. It does the FX transaction with the national currency instantly. That's how they're able to do that. Jason Cousins talked about some very interesting new features they're going to be presenting or putting onto the app very soon. And the one that I found really interesting was the peer-to-peer function, which will basically allow you to transfer gold directly to other people who have the app. And you'll be able to transfer the gold even to your contacts on your iPhone or your mobile phone or cell phone that don't have the app. But all they'll have to do when they receive that notice that they have gold is download the app and register to open an account with Glint. So am I saying you shouldn't buy physical gold and put your money into the Glint app and buy the physical gold through them? No, I still prefer having gold in my possession, but in economics, people have different preferences. No one is the same, and some of you might be interested in this. I will probably put maybe a little bit in there, but that's the way I am. Some of you might want to put more. All I can say is that all the clients that were affected by the administration from mid-September to mid-November, their funds were all protected. Their fiat funds, their gold was protected. So the referral code, as I said, is Mario Glint 79. If you enjoyed this video, please hit the like button. If you didn't, yeah, hit thumbs down. It doesn't matter. Please make sure you share this video far and wide. It helps the channel, as I've said many times in the past. And you can also follow me on other platforms like Twitter, BitChute, Steemit, and DTube. I wish you all a great day. Take care. Bye.